Hello and good weekend to you. This is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 15th of March. I'll tell you what, this month cannot finish soon enough. What I want to do in today's video is to go over just a couple of things. So first of all, what happened? Number one, what happened? I'm not going to necessarily go into the virus and the panic and all that stuff, but more just from a price perspective. To me, and this is something I keep telling you guys, is you gotta keep out of the news. It's helpful to understand from a macro perspective what's happening, but you have to be very, very careful about keeping that fragile, tender subconscious mind out of the opinion world of the news, because it will influence you and it will force you to act in the same manner as everyone else. And when that happens, you have no edge. You'll be behind the market. You'll feel that same sense of betrayal every time the market leaves without you. And it will be impossible for you to have any edge in the market. You will not be able to execute a contrarian trade where you have the maximum edge in situations like this. So I know it's tough. I mean, a lot of us have grown up on technology and social media, things like that, and coming to group consensus on things. But in this business, it is fatal if you get sucked into the greater herd, into acting like them. So I'll keep bringing that up, and I'll keep putting that thought in the back of your mind. And someday when you're ready for it, you'll understand what I mean. And you'll see that moment of decision where you're like, oh, wait, hey, if I were to take the opposite side of the herd, maybe I'd be able to, to get some edge here. And let me warn you, it does not feel good, especially in markets like this. Wow, does it feel really terrible to take a trade that goes against the crowd? And that's the beginning of your journey, where you can start to build those new pathways and understanding how to really fade yourself. Remember what I say all the time is you're not really trading against the market, you're trading against yourself. Okay, so off of the soapbox here, what happened the other day? So we had this panic move, which started on Thursday morning. Again, I'm based here in Eastern time in the United States. So just for your frame of reference, we had the move go and we started to punch down through that important point of control, which was at 8,000, and that held up really well for a long period of time until it just got snowed under by everybody else. And this is, again, this is what I'm saying, that crypto is not on its own here. It's really just more of like a remora fish on the side of a shark. It's just going to go for the ride. Every risk asset gets sold off. And this is the thing I've been pounding on the table for months, is like, look, there is no safe harbor. When stuff gets dumped out the window, everything gets sold because people have to raise cash. And the selling gets worse the lower it goes. So the selling that we had a couple weeks ago was bad, but it wasn't that bad. And now it got really bad. Got really bad the last couple of days. But maybe that's good, because we have to sort of flush things out. And quite honestly, as long as we've been doing this newsletter, I have not seen a capitulation event in the crypto markets. Not to the same extent that we've seen in the equity markets, which is really odd, but maybe we had one the other day. We'll know soon enough. So one of the things I want to bring to your attention is some of the odd behavior that I saw, because I was just trolling around Twitter the other day, and I noticed somebody trying to defend what happened with BitMEX. And here's the crux of the biscuit, is like, you have to be really, really careful about which exchange that you trade in, because you can get, in a perfectly well-capitalized position, you can get nailed on these things. You can get liquidated on a position, which is perfectly fine because of the way that they do things. So one of the things I want to show you here is like, this is Coinbase. So let's just assume that Coinbase is kind of our default, or maybe we can even go to Bitstamp. Bitstamp is going to be basically about the same thing here. They're all kind of correlated. They should be 100% correlated to each other, because they're going to be even more so these days arbraged against each other. So there's no real edge in holding a differential. So you can see the initial move on Thursday morning, and then we puttered around for a while, and then by the evening, then things really began to unravel Thursday evening into Friday morning, and then we saw a bounce. Okay, so, and presently we're just sort of loitering around in a range as the crypto market is looking at the clock going, wow, the U.S. equities futures will start trading at about 3 hours from now, and we don't know how they're going to open, but we know that we're secondary compared to them. We're just a little flea in the wall compared to the size of the futures market. So one of the things that I want to show you is just the bounce that came off of here. And now this was late on Thursday night, and then into Friday. And then, there was a pretty big event, Friday. The equity markets closed up real strong on Friday afternoon after the press conference. And it was basically shorts did not want to carry their positions into the weekend because in the equities markets, you can't trade over the weekend. So there's no way to manage your risk unless you're going to go counterparty with something like cryptocurrency, which a lot of them are just not comfortable with yet. Okay, so study this little rebound here and notice the difference between something like Bitstamp, which trades in it trades in the spot currency, as does Coinbase. I mean, I can bring up either of these and they're going to basically look the same. Now, notice what happens when I go over here to the BitMEX perpetual contract. And you can't even see it if you, this is a 12-minute chart, by the way. You can barely even see it, but what I want to bring to your attention is this nasty little move right here, which is this wick all the way down here. Notice this wick right down here. Just when things are heading higher, all of a sudden this thing takes and goes whap, and then out she goes. This is classic, right? That this is where all of a sudden the bids went away for a fraction, during a 12-minute span, the bids just went away. And this is where people just get whacked on something like this. You just have to be so careful when you're trading on this exchange, especially if you're anywhere near your margin limit. You've got to trade way, way low on the margin. So again, I'm going to bring up this chart. So here's BitMEX. Now I'm going to go back to Bitstamp, and it's not there. It's not there. There's none of that monkey business going on. You can see that. All right, so let's go back to BitMEX again. There it is. Yow. I wouldn't want to trade on that exchange. So be very careful. Look at events like this and see whether or not your broker is going to has any kind of history doing something like that. Okay, so let's zoom out and look at a bigger picture of what's going on. You can see that here's the initial decline. We were doing okay. We were holding 8,000 pretty well the other day. And then it just, we went from 79.50 and basically the price went in half over the course of the next day and a half or so. Into that night, Thursday night into Friday morning is when the big puke came. Now, this does look like if capitulation had a signature, this is sort of what it would look like. This is where people just said, I can't take this anymore. And look at all the volume. Now let's zoom out. Let's see what this looks like from a zoomed out perspective. Okay, let's reset this chart. Now you can see the volume for this week, and we still have, another 5 hours left in this week. You can see how extraordinary the volume is this week. We haven't had a spike this high really since the end of the 17 bull, as this was probably pretty close to a lot of capitulation happening at this point here, where we sold into there's a weekly hammer, almost a hammer candlestick, bounced back up, and then the blood began. But this, coming from 20,000 all the way down to 5,800 was a massive crash. And that's where the capitulation really occurred. It's just not the same way. I'm used to seeing capitulation happen at the bottom. And we really didn't capitulate in the November 18. Not really. That was just more of a consolidation, and then all of a sudden it decided to turn one day. But this looks like has the long lower wick and the big volume spike. This has all the hallmarks of maybe the beginning of something. Now, if we look at this on a log chart, we go out even to the monthly chart. If we look at this, okay, so we lost the trend line. Not the end of the world. Remember what I've been talking about from this larger time frame perspective. What is this? This is nothing more than just a big, ugly, like, seemingly going on forever triangle pattern. And so we've seen the price come down to the bottom of the triangle and bounce back up again. So to me, this is the biggest picture of what's going on. This is just simply the price coming back down. And unfortunately, the catalyst was something beyond Bitcoin's control. It was all risk assets got trashed, got thrown out the window, and Bitcoin was not yet a safe harbor. And it will not be a safe harbor until we start to get into, this sense of runaway inflation, or maybe even to some degree de-inflation. Is that a word? I think I meant to say deflation. Remember, guys, back in the recession, the great financial crisis of 2008, even gold got thrown out the window temporarily for a few months until it began to rally first. And so that may be what's happening here. So the larger picture, I think, is okay. Now, what do you do from here? Well, if you have a long time perspective, then this is a buying opportunity for you. If you're looking for a trade, then what you're going to do is you're going to look to trade along with the direction of risk assets. So just like I talked about the other day, where when I originally learned to trade stocks, it was you had to go from top to bottom. Market, what's the direction of the market? Sector, what's the direction of the sector? And then stock, what's the direction of the stock? Can you get all three of them to line up in the right direction that you want? So that's the same thing that we're going to use here. For right now, Bitcoin is going along with the direction of the rest of the risk assets. And the best way to understand that is really to understand what's going on with the S&P 500. Forget about the Dow. Don't watch the Dow. That's for the retail traders watching the media. That's one more thing that they're doing to you. Watch the S&P 500, and if the S&P 500, especially if the S&P 500, what I would watch for is to bounce back up and then a return to a downtrend into a scary higher low. This is the trap setup that I always look for. And rule number 3 of fractals, descending patterns, break to the upside. So when we have this combination of higher low, scary higher low, break above there, this is going to be a risk-on rally, which may last a couple of months. And it's going to be a party because everybody's going to be out there, doing the samba, doing the line dancing, everything like that. They're going to say, bull market's back, no problem. More than likely, we'll set up a lower high here, and then we've got more pain going. I think there's so much damage that has been done. And right now what we're doing is we're sacrificing for the good of public health, certainly in the United States and just about every country everywhere that I'm hearing about. We're sacrificing a recession. We're sacrificing the economy for the public good right now through social distancing. And so it's going to affect things. There's going to be a lot of downstream effects that are going to cycle up and down and back and forth for some time. So more than likely, we are not going to see any kind of V-bottom here, even in cryptocurrency. So it may be we just stay within that range bound. Back to the monthly chart here, we stay within this range bound kind of move for quite some time. Until all of a sudden, one day when nobody's looking, this thing will start to break out and rally. And it will be precisely when everybody ignores it. Like everybody just gives up on it and walks away and says, well, I'm sick of this. I'm going to go flip houses, or I'm going to do Amazon FBA or something like that. And then Bitcoin will start to rally. So what I want you guys to do is understand ways that you can tie in with the U.S. futures market. So probably the best way to do this is if you go over to TradingView, you can start by typing ES, And then S&P 500 E-mini futures. And we just moved off of the March contract, so the active contract should be now the June contract. So as of Friday, it should be, because this one's about to expire at the end of this week. So people start to roll into ESM. M stands for June, and then there's U, which stands for September, and then Z stands for December. So you don't want to look out at futures contracts that are that far out because they're not the front quarter right now. The front quarter is going to be, as of right now, June. So look at the ESM, and right now there's not going to be a whole heck of a lot of volume on this guy. Not yet. And that's immediately going to change. You can see this is all like really sparse and thin, and there's just nothing going on. And then as it gets closer and closer to being the front quarter contract, the volume really picks up, and it should fully switch over as of Monday. So if you want to know where Bitcoin's going, follow the S&P. As goes the S&P, so goes Bitcoin and or cryptocurrencies in the short term. Now, guys, something I think is a great idea is to investigate selling puts right now. Look at the massive spike in implied volatility that we have. Big time. All right, so big move that we've got. So how can you play something like this? Well, if you think that the support is going to hold and the price is going to stay, let's say, above maybe 5,000. Well, we'll see where the options are right now, but let's say it's going to stay within above 5,000 over the course of the next month. You believe that that's a strong possibility. Okay, you can go out to the option chain. Deribit right now, I'll still use Deribit for now until I have something better to use, even though they won't let me trade here anymore. Now, this is where sometimes the strikes, hopefully they're going to increase the number of strike prices for this. But right now, 5,000, look at this. If you can be paid to leverage one Bitcoin, you can be paid $800 basically for doing nothing. If you sell that one put, if you sell one contract, although you could sell a tenth of a contract, you could pull in $80 for leveraging 1/10 of a contract. So this doesn't have to be a big boy account. So for $5,000, you can be paid for that, which is a fairly significant. So if you divide 800 by 5,000, that's a pretty healthy 16% return for leveraging that capital for that. So these are cash settled, so you're not going to get assigned it. You know, it's unfortunately, they don't do physical assignment. But if it's in the money, by then you get cash settled. You have to pay the difference between that. But you start out ahead over $800 of credit right off the bat when you initiate that trade. Or if you want to play a little safer, you say, well, I think there's an even better chance it's going to stay above 4,500. Okay, great. You get a little bit more safety, but you get paid less. So you're going to be paid somewhere around 560, 570 for that trade above 4,500. And that certainly seems like a pretty good bet right now that it's going to be above there. So don't be surprised. Again, maybe we're not done to the downside yet, and we'll find out when the futures open in about 3 hours from now. There is certainly a lot of news and a lot of hysteria coming in over the weekend. The market will let us know as to whether that's already been priced in. Don't disagree with what the price says. The price is an immediate discounting mechanism for all the news that's out there. And then, of course, if you want movement, you've got the futures. So whatever is your favorite futures broker, man, this thing will move. So we've just had amazing movements in the futures markets, regardless of whether you trade the U.S. index futures or whether you're trading Bitcoin or Ethereum. Or you've got all the movement and the opportunity in the world right now. But again, these are going to be secondary to the U.S. markets for the time being because they are so much smaller than the U.S. markets. But pretty soon, this will trade on its own again, as it did for much of the year last year. Okay, guys, that's all I got for Sunday night. Again, it's going to be an interesting week. At some point, we're going to get an oversold bounce. We're going to get a relief rally, which it should come from conditions which most people will not want to take the bounce on there because they're convinced that more pain and suffering is coming, or they're still got their head in the ground thinking that that's the way it is. And that's where you get your edge as a retail trader. All right, folks, thanks for listening, and we'll see you online. Take care.